leave you with some important market opinion coming in from Chris Wood of CLSA. Stay tuned after the short ad space trading hour comes up next.
I think there's room for a further rally if there's a positive surprise on the deal. What's the positive surprise? It's they drop the existing tariffs. That will then allow the market to think that maybe globalization hasn't ended after all. Then we get a further rally, then monetary tightening expectations will come back into the market, and that would be the end of the rally. If, on the other hand, you believe the trade deal is going to happen, but they won't drop the existing tariffs, then I think the market's just about discounted it. If I'm completely wrong, there's no trade deal, tariffs go back up, then we go back in the markets to where we were on Christmas Eve. I think what they're arguing over is enforcement monitoring procedures. If the US insists on too aggressive an enforcement procedure, I think it's a deal breaker, because that would be like China, that would be humiliation for China. It would be like China subordinating itself to a US compliance officer. So that, I think, is where they're trying to work out a formula that's mutually acceptable on enforcement. My base case is no rate hikes, but I think there is a potential for the markets to price in monetary tightening again, even though it doesn't happen, if my base case on the trade deal, i.e. we get a deal and they drop the tariffs. That's the big issue. Do they drop the existing tariffs? If they've negotiated a deal, it makes logical sense to drop the tariffs, because the tariffs were put in place to put pressure on China to do the deal.